how to make consistent returns at least 1% a month, selling covered calls on your favorite stocks, starting NVDA and all the rest. This is what we're doing today. We are going over Market Chameleon covered call screener, and we're gonna focus on the filter covered call average return. We're gonna pick above 3%. So everything that gives you over 3% return, and again, we're going over October 18, which is the monthly. So in less than 30 days, you have about 3%, above 3% cover call returns on high market cap stock. As I said, NVIDIA, Tesla, Apple, all those. This is what we're doing. So let's get started and read a quick disclaimer. First of all, know that this is not a financial advice. I'm not a financial advisor. This is for entertainment, educational purposes only. Know that I am Ziv, also known as Finance After 40. With that being said, let's get started. If you're not a member just yet, Market Chameleon 7-day trial, link in the description below. So in order to get to the covered call screener, if you just want to sell covered call for income, which is a great strategy, don't get me wrong, I myself prefer to do a put credit spread, but a lot of you owns 100 shares of Tesla, 100 shares of Apple, 100 shares of NVIDIA, and you want to generate some extra income. You can sell covered calls against those 100 shares. So in order to get to this screen, go here, screeners, and click on single leg strategy, covered calls. This is what we're doing. It will bring you to this page, the covered calls screener, and all those filters you can play around. I decided for this specific tutorial to focus first of all on the monthly expiration, October 18. You can play around and choose whatever expiration you like. We are still in September, it's still early, so when you sell covered calls, you collect more income than selling, weekly covered calls that expire in like 2-3 days, basically. The longer you go, the more income you collect. Of course, the stock can go higher to your strike price, so that's like the give or take, as they say. Now in here, I'm gonna filter. I'm leaving all the rest as any, but I'm picking this one, covered call average return above 3%. I want to make at least 3% return on my money just by selling covered calls, and I want to do it on all those NVIDIA high volatility, high market cap stocks that we all know and love. Okay, and you can play around. I assume if you pick above 10% return in a month, you're not going to find NVIDIA and Tesla. You're going to find stocks that are low market cap and they can, do whatever they do. So I don't want to play that game, but I also don't want to do like 1%. 3% sounds good. You can play around and see what you got. And if you read here, it says the average covered call average return means the average percentage return for the covered call strategy over the course of the historical backtest observation. So based on history, the results that we're going to find have over 3% return. So that's good. That's just based on history. It doesn't mean it will happen in the future, but we have a good indicator. So let's scroll down and see what we got. And first of all, I want to see, we're down to 20 pages. I assume I haven't done the non-filter, but it's at least like 1,000 pages or something like that. And I want to focus, you see here, it focuses us with the stocks by market cap. We got a lot of NVIDIA, Eli and Lilly, PGR, ARM, and that's just page 1. So let's focus, of course, on NVIDIA. All this cluster of covered calls for NVIDIA, let's see what we got. Expiration is the same, October 18. Now you see here, there's no earnings, otherwise, or dividends or something, otherwise it will be here. You see here, E, next earning, October 11. It says 19 days to expiration. This is 19 trading days, even though it's almost a month for the whole calendar. So 19 trading days. And look at this. These are all the strikes that it gives you. to sell 136, 146, 141. NVIDIA is at 121.23 right now. This is the money that you are collecting up front. $123, 38, 43, 31. Let's focus on the ones that are over $1. And look at this, the distance moneyness from the stock. Okay, 12% away from the stock. And if you read this is a very good filter that I like to use, the moneyness, distance from the stock. The difference between strike price and stock price as a percentage of the stock price. For example, if the strike price is 110, the stock is at 100, the distance will be plus 10% out of the money. If the strike is 95, it will be negative 5%. So I'm looking for a plus sign first of all, and ideally double digits. So the stock needs to go at least 10% or 15%, like the video we've done yesterday. You can check it out, for you to just break even. Now remember, if NVIDIA, you have 100 shares, that's basically $12,000, and you sell, for example, this one, let's go with the first one, the 136, you do collect $123. That's your money, nothing is gonna happen to that. But you also, if NVIDIA goes to 136.1, for example, and sell your shares, assign your shares to someone else, it's a possibility. You keep that $123, but you also collect another almost $1,500, because it went up from 121 to 136 times 100. That's your money as well. That's the appreciation. That's where NVIDIA, like all-time high around 140, you can say to yourself, okay, I will sell and wait for the next dip to buy again. Something to consider. You got the IV rank, 61% for this. And you see here 53, 51, because this is like 20% far out of the money and you collect less than $1. I don't really like that. There's another option in here. NVIDIA, the 145, it's just like the 136, 135 still, $138. This is another $14 away. $14 away, 11% away, 62% IV rank. You got a downside cushion, you got green in here, covered call, average return 3.1% and 3.9%, 3.4%, stock only average return 5%, stock only win rate. Okay, you got a lot of information here. Cover call, win rate 62% on this one. So if it was me, if I have 100 shares of NVIDIA, and I prefer to just sell put credit spread on NVIDIA, but assume you do, look at those numbers. 62.2% covered call win rate. Okay, strike 136, collect $123, and be happy if you have to sell NVIDIA at 136. And if you don't, you still collect the premium, 123. If NVIDIA goes to, let's say, 130, you collect the 123, your price, your 100 shares are now worth $13,000. Option expire worthless. Happy camper. And do this again next month. That's basically something to consider. So this for NVIDIA. You can do the, as I said, the 145, 146 and go over this. Now let's see Eli and Lily. This was on a tear lately. I remember I've done a video, a Market Chameleon video, like a month ago when it was like 770, something like that, before the earning, like 3 weeks ago. And we talked about put credit spread. Market Chameleon found the put credit spread. Of course, it expired worthless because it just went up and up non-stop. So in here we got the different stuff. Look, first of all, before you do anything, look at this. Option IV rank, 37%, 31, 23. This means that your covered calls will not generate you a lot of money compared to all those NVIDIA 50-60% IV. Something very important to pay attention to. But if you just want to see what we got, 921 is the price today, 830, almost $1 billion market cap, no dividend, no earnings. October 18, okay, the expiration, and the calls that you sell, look at this. 1010, 1020 Eli and Lilly, which is $90,000, $92,000. But look at this. This is 9.6%, 10.7%, 11. That's not a lot. So if you do the math, let's do the same numbers, give or take. Here's NVDA. This is why this is the important lesson here. Option IV rank. NVDA, 11.4% out of the money, 62% IV, and this is why I like Market Chameleon. You got all this data. You sell the 135, which is $15 away, $14 away. You collect 138. Let's take the same number, 11.4, and go to Eli and Lilly, 11.8, even more, okay? And you collect, look at this, 123. That's it. So you do collect more using the NVIDIA one, basically. That's the whole point. This is 10.7, okay, 9.6. At the end of the day, NVIDIA, the goal when you sell option premium, you gotta understand, the higher the option IV rank, the more premium you get from selling options, and the more you buy, the more you pay if you buy just the call or the put, basically. And if you look at the other numbers here, let's say, you see here 68, 69, they're all over 3%. It's all good. No, it's only good if you sell for a profit and it doesn't reach your strike price. But if it was me, first of all, most people don't just have 100 shares of Eli and Lilly lying around unless you bought it like, I don't know, a couple of years ago when it was the price. I think 5 years ago it was 10 times less, something like that. I need to check. I think in 2019 it was like $90. So it did like 10x in 5 years. I'm not sure. I think it's from the pill that they have to lose weight, something like that. I'm not familiar with them. I just follow the option chain to sell option for income. But this is one way to look at the Market Chameleon. And so covered calls, average return above 3% for the monthly. You don't have to do 5,000 trades a day. You don't have to scan Robinhood, YouTube, whatever the case. You got, most of you have 100 shares of NVIDIA. You're a happy camper. You bought long time ago, it did a lot of moves. Maybe start to protect it, collect more income, and sell the ones that has like a 60% IV, option IV rank, 61%. You still need NVIDIA to go up at least 12%, and you still collect 123 by selling the 136. If you go to this one, 62% option IV rank, another 11.4% to the upside for NVIDIA to go from 121 to 135, and if it doesn't, or it closes below, you collect 138. Okay, that's the key here. 7 days trial for Market Chameleon, link below, and I will see you on the next one.